Dear students, we are in module 6 where we are learning the subsidiary books. So we have learned from the beginning introduction, what is accounting, the types of accounts, the words we use in accounting, the rule for debit and credit, journalizing the transactions, all that we have learned. So we have come to the next step, that is subsidiary books. So last module we have learned the purchases book. Now the next module is purchase returns book. I told you there are 8 books, 8 subsidiary books are there. So this is the second one. Now what is meaning of purchase returns book? Purchase returns book meaning goods returned to the supplier. See, when you are buying online also in Amazon and all, if you buy something and if you are not happy with that, you can return back. So that items will be recorded in the purchase returns book. Then sometimes they will allow you an allowance. That meaning you are not returning. They will reduce from the price. So that is also recorded in the purchase returns book. Then you have to learn about the trade discount. Trade discount usually we will get for making a bulk purchases. So that will not come in the books of accounts, but from the invoice price, if you are getting 10%, if the purchase price is 5,000, 10% trade discount you are getting, meaning 5,000 minus 500. 4,500 only the bill value will appear in the books of accounts. Now this purchase returns book is also known as returns outward book. Why returns outward book is, we are returning back to the supplier. So the items are going out of the firm. That is why returns outward book. Next you have to remember what is discount. So we are learning about, I told you about the trade discount. So we should know that what is discount. So discount is defined as reduction allowed on the selling price of commodities and services or on the amount due by the debtors. So we are going to talk about trade discount and cash discount. So trade discount, I told you, from the invoice price we will reduce. Whereas cash discount is when you are making an early payment, you can get a discount. So that will be recorded in the books of accounts. That is discount received and discount paid. So that will come in the books of buyer and seller. Whereas trade discount is just an adjustment from the invoice price. So discount is divided into two. One is cash discount and second one is trade discount. So what is trade discount? Trade discount is allowed to make bulk purchases or bulk sales. Higher the quantity, more will be the trade discount. And trade discount increase with the increase in the volume of purchase or sales. The more quantity you buy, always we can bargain for a discount. So that is the trade discount. Now you have to remember that trade discount will never appear in the books of accounts. See that we are going to compare with the cash discount. Always you remember that trade discount will be always a reduction in the invoice price. See, for example, 5,000 worth rupees things you are buying from a party. So you are asking for 10% discount. That meaning 500 you are getting a discount, trade discount. So 4,500 only will be the invoice price. So this 500 will not be recorded in the books of accounts. The purchase price will go as 4,500. That is the meaning of it's not recorded in the books of accounts. It's only an adjustment with the invoice price. Whereas cash discount treatment is totally different. Now cash discount is allowed on the invoice price. So that is the thing you have to remember. Cash discount is allowed on the invoice price, and for making an early payment it's allowed. So at the time of payment you are getting the cash discount. So you have to remember that cash discount, 20 days you are getting a payment time, but you are making the payment on 10th. So that meaning 2 by 10 net 20. So that wordings will be there. When you do financial accounting in your graduation level, then also you will learn that financial management problems. When you will learn, this concept is quite common. 2 by 10 meaning net 20. That meaning 20 days you are getting the time for payment, but you are making the payment on 10th day. So you are getting 2% discount. That is the cash discount. So it's always related to cash payment. And why we are allowing cash discount is to avoid the credit risk. Earlier the payment, better for the party. We are collecting cash and we can utilize the cash for something else. So that is the advantage. So it's always for timely payment, and the percentage also will be mentioned. So one example I am giving, 2 by 10 net 20. I have already explained that concept. Now it is not paid or received as cash, but we will adjust in the books of accounts. In the profit and loss account, it will come as discount received or discount paid. So that is the advantage. Now we are continuing with that. If, for example, if I want to give an example, Amit owes rupees 5,000 to Mihir. Amit allows a discount of 100 for making early payment. So this 100, how we are going to adjust? 100 rupees he got the discount. So the journal entry in the books of Amit will be Mihir's account debtor 5,000. He was supposed to pay 5,000 rupees payment. To cash account 4,900 because only 4,500 Amit has paid. Now discount received is 100. So this item will go to the profit and loss account. So discount received is 100. This is an income for the firm. It will go to the credit side of the profit and loss account. So being narration, what you will write? Being 4,900 paid in full settlement of the amount due to him. So that is the discount received. Now the next table is about differences between trade discount and cash discount. This is very, very important and many points I am going to give. So the first one is objective. Why trade discount is allowed? Trade discount is made to ensure bulk purchases or bulk sales. Higher the quantity, more will be the discount. Whereas cash discount is to ensure prompt payment, prompt and timely payment. Now accounting treatment, you have to remember, in the case of trade discount is not recorded in the books of accounts. I have already explained that it's an adjustment with the invoice price. See, remember 5,000 rupees and 500 discount you are getting. So that means invoice price, purchase price will be only 4,500. That 500 is not adjusted. It will be only adjusted with the invoice price. Whereas cash discount is adjusted in the books of buyer and seller. For one person it's discount received, other person it's discount paid. So this is with both buyer and seller books of accounts it will appear. Now basis of accounting, trade discount is always related to purchases. Bulk purchases when you are making, you are getting a trade discount. Cash discount you have to remember only for cash payments. It's not related to credit payments. Now the rationale why they are allowing. Trade discount is for reduction in price. Whereas cash discount is for prompt payment and to reduce the credit risk. Type of transaction you have to remember, trade discount is allowed both for cash and credit transactions, whereas cash discount is only for cash transactions. And next point is volume of discount. Higher the quantity purchase, the more will be the trade discount. Whereas earlier the payment, the higher will be the discount for the case of cash discount. Now profit and loss account adjustment, I told you trade discount will not appear in the profit and loss account. I told you again, I am repeating that it's only an adjustment with the invoice price. Whereas cash discount will come in the profit and loss account because it will be discount received and discount paid. This will be adjusted. I told you already it will appear in the books of buyer and seller. Now parties involved. Trade discount usually manufacturers are giving it to wholesalers and wholesalers are giving it to retailers. 30%, 40%, 10%, that trade discount will be there. Whereas cash discount meaning it's the creditor is giving it to the debtor. Now the format of the purchase returns book I have given. So last module also I have explained that purchase book also 8 columns will be there. First is date, description, the name of the supplier will be there, debit note is there, ledger folio. When we are doing the problems, this we will not record, but in the actual business practice, they will be recording that because they will have reference to give. The bill will be there, ledger folio, ledger which page number, all that references they will give. The quantity purchased, the rate, the gross amount and the net amount. Now, what is debit note? Debit note is also important. When goods are returned, the purchaser will reduce the amount payable by the seller. So when you are returning the item, so debit note is prepared. I am giving a format also. So the purchaser will prepare a debit note and sends it to the seller because we are returning the item. So there should be a proof for that. So usually 4 copies of debit note are prepared. 1 copy for the purchase department, 1 for the production department, 1 for the costing department and 1 for the supplier. So 4 copies. So everywhere it's recorded. So the transaction will have proof. Now relevant corrections are made in the record. So purchase returns will be adjusted accordingly. Purchase department, supplier, costing and production, it will be recorded. Now specimen of the debit note I have given. How a debit note is prepared, I have given one slide for that. A book returned by the person. So 3,750, trade discount was 375. This returned item, how the books will be, debit note will be prepared. I have given a sample debit note also for your reference. Now first problem, I am taking just three transactions to explain the purchase returns book. So enter the following transactions in the purchase returns book of Messrs. Sapna Book Agency, Bangalore. First one is 2020 January 1st. Return 15 copies of business statistics book to Messrs. Elisa Publishing House at rupees 150 each and trade discount is 30%. January 5th, Return 5 copies of Advanced Accounting to Messrs. United Publishers, costing 180 per book. Trade discount is 10%. Third transaction is January 10th. Return 5 copies of Principles of Management to Messrs. Tata McGraw-Hill Company at rupees 75 per book, and trade discount is 20%. Now the solution, 3 transactions, purchase returns book. So the 8 columns are there. The date you have to write, and Elisa Publishing House. The trade discount is there, 30%. So this you have to remember, 15 copies are purchased. 15 copies of statistics book at the rate of rupees 150, 2,250. Now you have to reduce the trade discount 30%. So 675 you have reduced, and the net amount is 1,575. Now next is accounting book return, advanced accountancy book return to United Publishers. So 5 copies they return, 180 rupees per copy, so 900, and 10% is the discount. So 900 minus 90, 810. Now third one is Tata McGraw-Hill, Principles of Management. 5 copies returned, and the rate of per book is 75. So, and trade discount is reduced, 375 minus 75, 300 rupees. So the total is 2,685. Now you have not learned ledger, but I can show you the postings also, because I told you from subsidiary books we are posting it into the ledger. So next module when I'll explain ledger, it will be more clear, but now just I'm showing how it will appear in the ledger. So we have to write 3 suppliers account. So here you have to remember Elisa Publishing House account to purchase returns. So we are debiting that item 1,575. Next is United Publishers account to purchase returns 810. Next is Tata McGraw-Hill, 300 rupees is the purchase returns. Now these totals if you take Sapna Book Agency, Sapna Book Publishing Agency, credit side if you can see that sundries 2,685. So this is the advantage of purchase returns book. So this you have to remember that purchase returns book, we will all the items returned to the supplier we will record. So when you are posting the individual supplier's account and totaling, that will be the correct total will appear in the credit side of the distributor or the supplier or whoever purchased the item. So that is the advantage of purchase returns book. And you have to remember 4 copies are prepared wherever it's required. Production department, purchase department, costing, supplier, everywhere they are keeping a record of that. So that is how they are rectifying the transaction. That is very important. So this subsidiary books is helping in rectifying the mistakes and in making a systematic way. So that is the advantage of subsidiary books. So this is what I want to explain, and I will come with the other modules. Now other 6 subsidiary books we have to explain, that I will be explaining. So this is what I want to tell you with this module, and again I am giving you more problems in the description box, and you have to see that and you have to work out that problems. Only with your hard work you can learn the subject. So the more you work, you will be more thorough with the subject. And if you want to continue with commerce education, please remember that this is the base. From here only you can develop that. So this is very, very important. The basic things you should be thorough with. So that is the best thing to learn the subject. So happy learning with Dr. Alice Mani, and you see the earlier videos link posted in the description box. Please remember and you check for that, and don't miss that videos, and give me feedback how I can improve, what is your expectation. So this is how we can learn the subject, and I'm wishing you all the best. Happy learning with Dr. Alice Mani. Thank you.